The tech sector continues to be the darling of Wall Street, but with AI coming along, what does it mean for our investments and our savings? I'm Heather Branch. This is financial advisor John Hicks, founder of J. Hagan Capital, who is here to help us at least attempt to begin to understand. When it comes to technology, I'm not sure that there is any full understanding because it moves so fast. That's probably the biggest trick about it all is how fast it all moves. Trying to keep up with the available information, how it affects us. And then here comes, as I was saying, AI.
Sure. Well, I mean, everything is moving fast now. What are we, 3 or 4 weeks into a new administration? Mm-hmm. And it is like light hyperspeed. Trump 2.0 is boldly going where no one probably ever should. I mean, boldly going where no person has gone before. Or whatever you want to say. No, like here's the craziest thing. So with AI, I think there's going to be a true evolution and a change of how we do almost everything. Guys, if you haven't like seen some of the studies and some of the research reports on what artificial intelligence can help us do, not just think better or work through problems, it can spot, like they can have these drones that go out over crops and it can spot the areas that may need some herbicide where the rest of the crops don't need herbicide at all. So not only is it potentially cost savings, it stops all those herbicides from getting on everything and damaging all of the food and the water systems and everything. It is amazing what it can do. So do I think there's a crazy opportunity for AI to do great? Yes. But we just recently saw in China, one little gyration, one piece of new information can cause the entire stock market to careen 2%, 3% in a single day, right? Yeah. And right now, a lot of that stuff is speculation. So It's really interesting. So you add that to the fact that Trump 2.0 is acting in ways like 1.0, but with more speed and more viciousness. Now we're talking about tariffs. Everyone's going to have a tariff on them. And if I don't like what you're saying, tariff. And then all of a sudden, the markets are going crazy about this, right? Mm-hmm. So the interesting thing is we're going to have a lot, in my opinion, we're going to have a lot of volatility, a lot. So when you have the AI revolution or evolution, depending on how you would look at it, causing all kinds of volatility. Mm-hmm. Now we have an administration who doesn't appear like they're going to back down to anyone. And in the long run, I think that I agree with almost all the stuff that they're talking about doing, at least enhancing things, right? Finding government failures, finding government inefficiencies, finding ways that we as Americans can pay less tax dollars, hopefully, but get the things that we need for our country to keep us safe and protected. But if you do it all at once and you have trade wars at the same time, and we have issues because, again, some of these trade wars, some of the AI is coming from China. Right? So if we're coming from China, this could be issues. So Heather, all of this comes together. So I know we're talking about AI, but the amazing thing is that all of this is intertwined with what I'm going to say that AI is going to absolutely create more of: volatility, tremendously more volatility, because this show is about understanding our refinances in retirement, or how do we get to retirement, to get through retirement. Volatility is one of the things that will crush every one of us if we don't have a handle on it. So regardless of AI, there is an unfortunate situation where if we have a tremendous amount of volatility, even good plans, if we can't stick with them, potentially blow up. That's just how that goes.
Yep. We have obviously seen companies like NVIDIA. We've talked a lot about that on our radio program and on our podcast, how NVIDIA has helped prop the S&P 500 up. The conversation, as you were just saying, about the Chinese AI, the startup in particular, DeepSeek.
Has been no one ever heard of that.
Into the conversation. I know, so suddenly.
Until a couple weeks ago, no one knew it existed.
Oh, DeepSeek. It's like, what? And here we are. Everybody is talking about it. Came out of nowhere. And just like that, NASDAQ dropped, boom, 600 points.
Absolutely.
As you were bringing up, AI, is it too volatile? Will it increase volatility? Here is asset manager Kevin Mann talking about it on Fox Business.
AI isn't dead. In fact, I still claim that we're just in batting practice of a double header. So this is a long road and a long path forward. And those companies that aren't investing in AI now are likely to be the losers down the road.
All right. So did he start by saying AI is not dead? Who is saying that it is, first of all?
So it's interesting. So that's a really good point, because I saw a lot of reports that came out saying, hey, because of DeepSeek, all of the stuff that we've been doing as Americans, basically all the stuff we've invested in, it's gone up. Meta, Microsoft, NVIDIA, we may have been investing in the wrong technology, because when this DeepSeek came out, What the Chinese said, and no one can verify this yet, but what they said was, hey, not only can we do AI really close to you guys, they didn't try to say it was better yet, but we can do it for a fraction of the cost. Now, guys, this is a big deal because when you look at the computing power that it takes to run these nano computers and to do a ton of them with all these processing and computing things that AI has to do, they were talking that we were going to have to triple our energy consumption just to keep these computers running and making decisions for us, right? So we have invested a tremendous amount. NVIDIA, Microsoft, Amazon, Apple, all these people have invested psycho billions and billions of maybe even trillions of dollars into infrastructure to develop these power type plants. China comes out and says, yeah, we can do that on pennies on the dollar. And all of a sudden, every one of those companies just got like a Mike Tyson punch right in the mouth. Now, here's the question, because we're talking about investing now.
Yeah.
Should you invest in those things? In my opinion, I agree with exactly what Kevin said. I think that AI is here to stay, but market prices are kind of expensive. They're kind of high. Now, they've come down a little bit over the last couple of weeks, but they're going to, again, coming back to my original point, things are going to be very volatile. If it's true that we're just in the batting practice of a doubleheader, now if you guys aren't baseball fans out there, I'm a huge baseball fan. But like if you have a game, your standard hitter is going to get to the plate 4 or 5 times. So in a doubleheader, that may mean that we're in batting practice. We may have 10 at bats the next 10 years. Some of those at-bats, we may strike out, right? There's where that volatility comes in. That's where the AI doesn't do the way we want. And some of those at-bats, we may get on base. We may get fortunate, maybe even hit a home run. But there's going to be a long time that we're going to have to think about how this AI is going to work out. Now, what I want to add to that is, and again, I have to consistently bring this in because it's going to shape all of us. With the administration, and specifically President Trump is doing, is potentially adding more volatility to this structure. Why am I saying that? Because a lot of these semiconductors, a lot of these chips, a lot of these minerals, these deep earth minerals that we need to create chips and semiconductors and AI, those come from other countries. And if we have tariffs on them, I'm not saying it's a right or wrong decision, but I'm saying now all of a sudden no one really knows what the cost is going to be. Do we import this steel? Do we export steel to China for them to make things? What about titanium? What about lithium? What about all these things? What are the costs going to look like? Because all of a sudden, if we increase cost, what does that do to AI? Well, at a very minimum, it's going to diminish its speed that it can take place, or it's going to get much more expensive. So that compounded with the idea that China has already come out and said, hey, now again, China is notorious for not telling the truth. Let's just be straight up. I'm not going to say they're liars, even though they are. I'm going to say that they are notorious for not telling the truth or telling their version. So when you think about what may be happening, guys, I want to be very clear on why I'm going this direction and going this speed, because I think that the Trump White House is going to do positive things in the long run. I think that we could have a lot of short-term absolute punches in the face where we're going to have to wonder, wow, I just struck out 3 times in a row. Using that baseball analogy again in a doubleheader, I may have just struck out 3 times in a row. The question is, are we going to leave that hitter in the lineup, or are we going to pull him out? Right? So those are those things to start thinking about. Those are things that, again, if we're just talking about AI, I think it's a little bit of a different conversation. But you can't talk about artificial intelligence right now if we're potentially doing international negotiations, especially when we're talking about tariffs. Again, I'm not against tariffs. I think if it causes our frankly, even our allies to play fair with us on trade, I do agree that we've been treated incorrectly when it comes to trade fairly in this country for a long period of time. That's not just the previous administration. That's just because we weren't very good at negotiating for a while. And I think that they're going to make everyone come to the plate. So having said that, though, there is going to be tremendous volatility. So you're going to have conviction in the way you invest, right? So that always comes down to, and again, what we're talking about on this show is how do we fix our finances in a way that we can stick with it and win in the long run, which means retire on our terms when we want with as much money as we want. And what I'm telling you is, guys, you're going to have to buckle up the seatbelt. Or you're going to have to find different protections in your portfolio. That is what my team is really good at doing, because I do believe in AI. I think it's fabulous, but I also am very, I've seen this happen a lot of times. I don't want, because the market's really high, people to take a 25, 30% hit, which could absolutely happen. There are all kinds of gurus that are saying, in the long run, we feel pretty good. But could we easily have a 20 to a 30% correction here? Yeah, I mean, realistically, that's a possibility, especially if no one knows how profitable companies are going to be because of tariffs import taxes, export levies, things like that, that'll factor in, right? So again, Trump 2.0 is a little bit different than 1.0. He's not taking no for an answer. That could be good. That could be bad. And all I'm telling you is the markets like a little bit of gridlock. They like a little bit of time to digest. And if they don't get that time to digest, there's a lot of indigestion that frankly happens. And that's where we're seeing it. We're seeing a lot of volatility.
Okay. Helping you to understand how you can stay invested, have some benefits and earnings on things like tech and AI, while also adding layers of protection. Because if you're 55 and older, you don't. 55 has become such a complicated age because it's not old anymore.
Not at all.
55-year-olds, they still want to be invested, but also we are starting to think about our retirement at that age.
Sure.
We don't want to make a stupid mistake either.
Well, the question is, can we afford it?
Yeah.
When we're 55 to 59, can we afford a 30 or 40% hit?
That's right.
Even if it comes back. What if it takes 5 or 6 years to get back to even? Can we still retire when we want? See, those are the questions. They're a little different than, hey, how much money do I need to put in to have a lot of money? The question is, how do I get this money to do what I want it to do on my time? Bigger question.
This is what John and his team are here to help you figure out how to make your money do what you not only want it to do, but need it to do to support you in the life you intend to live in your retirement. Visit us at retirementsolutionshow.com to get started on this conversation. We're here to help you get some answers. Also have links posted in the show notes, so you can just click there. Or again, it's retirementsolutionshow.com.